Good morning. This is Bloomberg Daybreak Europe. I'm Jemana Bersachi in Dubai, and these are the stories that set your agenda. Stocks slide in Asia with the gauge of global equities on track for its first weekly decline in 4 on concerns over stretched AI valuations and as China's monthly exports unexpectedly contract. Trump's mineral mission. The U.S. president holds White House talks with the leaders of 5 Central Asia nations as he looks to widen the supply of rare earths. Plus, the Tesla trillionaire. Shareholders approved the biggest pay deal in history, offering Elon Musk $1 trillion if he meets performance targets. All right, let's get you up to speed on these markets. We have had quite the pullback yesterday for global equities. Before I dive a little bit deeper, though, I just want to bring you some breaking news that's been crossing. We are getting some earnings come through from Daimler Truck, so let me just bring you some of the headlines there. Third quarter adjusted EBITDA came in at 716 million versus estimates of 757.2 million. So a bit of a downside surprise coming through there. As for revenue, also a downside surprise coming through. Third quarter revenue, 10.59 billion euros versus estimates of 11.4 billion euros. So a miss on both the top and the bottom line. However, they are saying for the full year, they do see adjusted EBITDA coming in between 3.6 billion to 4.1 billion as well. So this is just coming through from Daimler Truck Holding. As you can see, year to date, though, they are down around 5.9%, a miss on the top and the bottom line. And we are getting thick into earnings season here. But let's just broaden out and talk about the broader market, because it is one of quite the volatility. Yesterday, we saw a pullback for Wall Street indices, the Nasdaq, the S&P, respectively seeing declines of 1.9%, 1.1%, some concern about some of the weaker jobs data that's coming through on the private side, of course, because the official data hasn't been published due to the shutdown. Today, some stabilization, though. European futures looking to open up slightly positive, so up around 10 basis points. FTSE is smidge negative as we think about the Bank of England and the upcoming UK budget that's going to be hanging over that market. S&P futures, Nasdaq leaning towards the green, however, up 0.2 and 0.3%, but still on track for weekly losses. Switching over, I just want to point out as well that the handover from Asia has been substantially negative, down about 1%, specifically led by losses on the Nikkei, on the Kospi. We're going to talk more about that shortly. But the crux, so the epicenter of the sell-off this morning has really come from Japan and South Korea. 10-year yields in the U.S. sitting at 4.10. We rallied about 6 basis points yesterday after the Challenger jobs data came through, suggesting the third worst month since October 2020. So it's really taken a long time to see data this bad come through on the private jobs front. The pound slipping a little bit this morning, 130, 120, and then gold seeing a bit of money pour in, given risk-off sentiment just shy of $4,000. Okay, let's talk more about how some of these Asian markets are faring with Winnie Su in Hong Kong. Winnie, first of all, just give us a rundown of some of the price action that we're seeing in Asia and why the losses have been led specifically by the Kospi.
Yeah, morning, Jemana. It has been a very volatile week for Asia specifically. We're talking about the MSCI Asia now down 1% and headed for the biggest weekly loss since August. And like you mentioned, it's really been dragged by these technology names that have run up so much on these concerns around valuation. And here, SoftBank down about 7% is the biggest drag on the gauge. And that's also dragging the Nikkei down by more than 1%. And a similar story with the Kospi, which is also very heavy on these the technology names, including Samsung and SK Hynix. Now, Kospi is also headed for its worst week since March. Now, flip the board, because we are talking about some of the key data points that we just saw from China. Here, exports actually fell the first time in 8 months, and we're talking about exports down 1.1% compared to the previous year, and that is way lower than analysts' expectations expectation of 2.9% of growth. Overall, yes, there was a lot of front-loading. There was a lot of front-loading the same time this year, but it was still a disappointment just because how this is a signal that the economic picture for China is likely to still remain weak and that it's going to be more difficult for the government to hit that 5% growth. However, interestingly, we are seeing that the market is not reacting as much. When you flip the board and take a look at how the onshore stocks are doing, so today actually it's quite flat, not moving much because traders are looking past these data points and focusing on how the U.S. and China has already struck a positive tone around the trade deals. So more expectation for more trade deals to come. But when you take a step back, just looking at how stocks in Asia have run through, and it really is that profit taking for those tech names that have run very strongly this year.
Yeah, a good one, and good to point out, Winnie, that obviously the October export data is a reflection of the month before we had that President Trump and President Xi reconciliation. So the effects of that yet to be seen. Thank you so much for running us through it all. Volatility hit Wall Street with strong evidence of a cooling labor market, pushing high valuation tech stocks and crypto to big losses. Bonds rallied on bets the Federal Reserve will cut rates. Let's talk to Paul Dobson, Bloomberg's executive editor for Asia markets. Well, this is the second time this week there's been a big market shudder. It happened a couple of days ago and then things stabilized. It happened again yesterday. What do we make of the market moves here, and why are investors so jittery?
Yeah, good morning, Jemana. That's been the story of this week, up and down, backwards and forwards. And you've got this kind of trade off, this tension or tug of war going on at the moment between those that are buying into the AI story, that are, really enthused by the idea that AI is going to be transformational and looking to jump in every time that there's a dip in any equity related to that narrative. But you've also got a second cohort of investors who are worried about the valuations, frankly, are worried about the spending plans. Where's all the money going to come from? How can you justify such humongous investment? Is there really going to be appetite for it when you've built it? And those two kind of conflicting forces seem to be bouncing off each other at the moment and sending us pinging backwards and forwards. And I think it's been all the time, basically, since we had the big tech earnings from the US, that the market has been in this mindset of, do we believe in the story? Do we continue to push things higher? Or, have we gone too far? Are we into that bubble zone? Is it time to lighten up here?
Yeah, we were talking about investors being perhaps a little bit jittery. I mean, how likely is it that these nerves spread to other markets, not necessarily equities?
Yeah, a little bit jittery is right. And if you look at implied volatility, as measured by the VIX, for example, that is definitely up. And that talks to the idea that investors are looking for somewhere, to hedge a little bit the risks that we have. But the problem is, in other markets, it's not entirely clear, what are the havens right now? Where is the best place to hide away if you want to avoid this story? And I think that that's part of the reason why there isn't too much contagion going on at the moment. It seems like the bond market, FX market, is to a large extent letting stocks sort this out for themselves, and people are within the equity market itself looking, kind of at the undervalued parts of the market, coming out maybe of the frothier parts or, the riskier parts, and putting money into some of the more stable assets within the equity market. I think bonds have got their own problems at the moment. The Treasuries market has also wobbled a little bit this week, and that's because you've got the Fed members telling us quite emphatically and unanimously, it almost seems, that they're not minded to cut again in December based on the current evidence that they have. They're saying inflation looks sticky, the labour market's bad, but it's not that bad. Maybe we should take a pause at the next meeting. And the market had been counting on them to cut. So, I think that that's also causing a little bit of that volatility in the background, but for a completely different reason.
Yeah, and also I'll just add to that shopping list the question mark over the validity of Trump's tariffs as well. Another thing to think about. Paul Dobson, Bloomberg's executive editor for Asian markets. Thank you so much. Now, Tesla shareholders have approved a $1 trillion compensation package for the CEO, Elon Musk. More than 75% of the votes cast were in favor of the unprecedented pay plan, which clears a path for Musk to become the world's first ever trillionaire. Joining us now from Hong Kong is Bloomberg's Danny Lee. Well, Danny, apart from that eye-watering figure, can you tell us more about this deal and what it means for Tesla?
Well, Elon Musk has been given one of the world's biggest corporate pay packet award, but the question is whether he will actually meet the high number of targets he will have to clear in order to receive such an award. Now, ultimately, Tesla is a $1.5 trillion company. He has to take that valuation to 8.5 trillion, deliver 400 billion US dollars worth of profitability, and that's really kind of unheard of ever. You know, this is such stretched goals. So there's a lot he has to do in order to now deliver the magic, to deliver in terms of not just on the financials, but on the operational side with all the products he has promised, and to try and grow sales by a huge number. So it's not going to be an easy time, but clearly the overwhelming support that Musk has received, that means that he's been given a free run to try and do things his way, particularly to pivot to AI and automation and all the robo-taxis he wants. But clearly he has got one of the biggest prizes, and that is getting more control over Tesla ultimately. Yeah, ultimately that's what it boils down to, with 70% of shareholders voting in favor. Bloomberg's Danny Lee, thank you so much. U.S. President Donald Trump says he'll look to diversify critical mineral purchases as the U.S. seeks to address China's dominance in rare earths critical to advanced technology manufacturing. Trump made the comments during a summit at the White House with leaders of several Central Asian nations. Now, Bloomberg's Hong Kong news desk editor Balazs Pans joins me now. Balazs, tell us more about the summit and which countries were there, who was in attendance, and what was discussed.
Yes, Jumana. So the countries present at this meeting were Kazakhstan, Uzbekistan, Kyrgyzstan, Tajikistan, and Turkmenistan, which are countries, if we zoom out a little bit, in a part of the world that borders Russia, China, and Iran. And this is also a region which is very rich in resources. In this part of the world, Russia has had a historic influence, and China has really stepped up its influence as well. Just this June, China and these 5 countries signed a very broad agreement, and now the U.S. is trying to mitigate the influence of China a little bit. And the reason why this region is important to the U.S. is, as you just mentioned, they are very rich in resources, including in rare earths and uranium. And we know that the U.S. has been trying to mitigate its dependence on Chinese rare earths. We saw the agreement signed with Australia not too long ago. So this is another way the U.S. is trying to find new sources of those crucial, very, very important materials.
Yeah, and it wasn't just rare earths on the agenda, was it?
Yeah, that's right. So the 2 largest countries at this meeting, Kazakhstan and Uzbekistan, signed some side agreements with the U.S. In the Kazakh case, they agreed to join the Abraham Accords, which is a largely symbolic step since Kazakhstan has had diplomatic relations with Israel for a very long time. But it is an important boost to this program, which is to this accord, which has been one of the signature achievements of Trump's first term in office, and has been flagging a little bit. So it's an important signal for the White House. In the case of Uzbekistan, they signed an agreement to invest $100 billion over 10 years in the U.S. Now, obviously, we don't have a lot of details on what this might entail. It sounds a little bit like those trade agreements that the U.S. signed with countries like Japan and Korea, where these countries agreed to invest in the U.S. in exchange for more favorable trade terms. But it does show the U.S. stepping up its level of engagement with this part of the world.
Yeah, so interesting, especially because that part of the world has tended to be within the sphere of China. So Bloomberg's Hong Kong news desk editor Balazs Pans, thank you so much. Let's take a quick look ahead to today and what's on slate. More earnings. 7 a.m. we get IAG earnings, so watch out for that. 3 p.m. this afternoon, we also get the University of Michigan sentiment. So that will be a good one for a test for consumer sentiment and how consumers are feeling about inflation expectations as well. Always a good one to watch in the U.S. And then 3:15 p.m., I think special attention will be paid to this one. The Bank of England's chief economist, Hugh Pill, will be speaking, coming on the heels of yesterday's Bank of England decision. A closer split than what people had been expecting yesterday, 5-4. So they were very close to cutting, but didn't because of the deciding votes by the Governor Bailey. Well, you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DayBGo. So that's DAYB Go for some of the top stories. Obviously today, speaking about Tesla and the surprising export contraction out of China overnight. Now, coming up, we asked the Bank of England governor about comments by populist leader Nigel Farage that he would replace him. More from our interview with Andrew Bailey next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The Bank of England held interest rates at 4% in a tight vote that laid the groundwork for a December cut. Attention now turns to UK Chancellor Rachel Reeves, whose budget later this month must avoid fueling inflation in order not to derail the Bank of England's path towards a cut. Bloomberg's Francine Lacroix spoke with Bank of England Governor Andrew Bailey following the decision.
Now, in August, I would say I was concerned more on the upside risk. But I think the news that we've had subsequent to that has left me in a more balanced position. So that was very much my view. But as I've said a number of times, we do need to see more evidence, because so far we've had one inflation number that's come in, under what we thought, which is obviously good. We need to see some more.
So what would sway you actually for December? And when you say that it was balanced, does it mean that one extra data point would have made you want to cut?
By December, we'll actually have two, because we have 2 months' worth of data between now and our December decision. So we'll have two sets of inflation numbers, two sets of labour market numbers, two sets of most other numbers as well. So that will be important. I think the conditions at the moment suggest that policy remains restrictive. We've passed peak restriction, I think, but that's not surprising. We've been cutting rates, and no surprise there. That's what we intended. But I think it remains restrictive for the moment.
You've also said that decisions become closer calls as we near the end of the easing cycle. Does that mean that we could have bigger pauses in between cuts than we currently have?
Well, I think that really depends, of course, on how conditions evolve. I think the point we're making there is obviously the nearer you get to wherever this sort of neutral rate is, you're going to be slowing you've got to land the thing actually in that sense. I think that's the point we're really making. So, as we come down the sort of the path, you would expect some, we've got to land it, hope.
So longer pauses?
Well, at some point, you'd like to think, obviously, we're in a sort of, neutral condition, as it were. I mean, that will always depend upon the shocks that we're seeing, of course, around us as to how those evolve. But you'd like to think we'll get to that point. I'd like to think we'll get to that point.
Governor, I know the BOE doesn't assume anything about the budget, and of course you take fiscal policy as read when it's set out in the budget. But as Governor, what would you like to see most in terms of broad fiscal impulse from the Chancellor?
Oh, well, I'm going to wait for the Chancellor to announce it on the 26th of this month.
How would you describe your working relationship with the Chancellor?
Oh, very good. Very good. We talk quite often. It's a good relationship.
Just a quick final question. Nigel Farage told us, speaking about you, that this is a quote, he's had a good run, we might find someone new. What do you say to that?
Well, I made a commitment to serve out my whole term. That's what I intend to do, and there's no desire to change. It was a very cordial meeting we had. You may have seen the letter that I wrote following the letter that Richard Tice wrote to me. I wrote quite a long letter back explaining particularly these two issues, QT and interest on reserves. There are some differences of view, but we had a very cordial meeting. I intend to serve out my full term as governor.
Well, there you have it. That was the Bank of England Governor Andrew Bailey speaking with Bloomberg's Francine Lacroix after the MPC decision. Now, ahead of the budget, a UK parliamentary committee has called on the government to raise taxes on online betting operators. The Treasury Committee says they should be taxed more than physical casinos because they pose a greater risk of addiction. At the moment, remote gaming duty is charged at 21% of profits, compared with up to 50% for physical casinos. And coming up, as the UK's private schools come under pressure at home, we'll look to how they're expanding abroad. Details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The UK's 2,500 private schools are under pressure after being hit by the imposition of 20% VAT on their fees. Bolstered by government backing, many are choosing to expand abroad in a bid to raise cash. Bloomberg's Tiwa Adebayo joins us now with more. Tiwa, so why are these schools so eager to open branches overseas?
Well, I think, quite frankly, a lot of them are looking for new revenue streams. These are schools often with centuries-old brands, really recognisable names in the UK, and now a lot of them are looking to capitalise on that fact. And it's a booming industry. We've seen the number of private schools over the last few years tripling since 2017. It's up from 51 to 151 campuses abroad. And also, in terms of profits, they're exploding too. Over the last decade, they're up 18 times, reaching £29 million in the last academic year. And when you also consider the fact that in the UK, most of these private schools have charitable status, which means they don't pay corporation tax on overseas earnings, it does become quite an attractive opportunity. But it's also worth remembering that there's demand abroad for these British schools. Typically, these parents would be sending their children abroad for school, but now they can access that British education on their doorstep. And crucially, they can pay the school fees in their local currency, which does make a big difference when you think about exchange rates. So this is becoming a real opportunity for schools that are looking to perhaps diversify their income streams.
Yeah, guilty as charged. I live in Dubai and my children go to a British school over here in Dubai. What are the risks for some of these schools going into business with foreign actors?
Well, as you mentioned, these are very prestigious institutions. We're talking about the sort of places that have educated prime ministers, for example. You know, they're so historic that in some cases they're kind of intertwined with the British identity and culture. And so I think the main risk here is denting that image, and in some cases perhaps for these schools tainting their legacies, particularly with association with foreign business partners. In the story that's out on the terminal this morning, one of the examples we go into is the opening of Rugby School in Lagos, Nigeria this September. That development is being financed by a firm called the Chagri Group, and one of their founders has faced quite a number of controversies. For example, he was forced to pay $1.8 million to resolve allegations that he broke US election law in 2021. So it's a risk for these schools to be associated with some business partners that perhaps don't quite live up to their historic reputations.
Yeah. Tiwa, thank you so much for bringing us that story. As I said, I've got skin in the game, so fascinating to hear your reporting on what some of these UK private schools have been doing. Tiwa Adebayo, if you'd like to read more on that story, it's available on the Bloomberg terminal. Well, coming up, we are expecting results shortly. We're right in the thick of earnings season now. From German defense and security firm Hensoldt, it's been quite the run-up in the stock this year. So we were going to be talking more about the earnings that come out. Also, what is next more broadly for the European defense industry, too. So that's coming up as we keep a close tab on markets. A big pullback overnight in some of these Asian stocks indices. But U.S. futures are stabilizing. All the details next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Joanna Bersace in Dubai, and these are the stories that set your agenda. Stocks slide in Asia with the gauge of global equities on track for its first weekly decline in 4 on concerns over stretched AI valuations and as China's monthly exports unexpectedly contract. Trump's mineral mission. The U.S. president holds White House talks with the leaders of 5 Central Asian nations as he looks to widen the supply of rare earths. Plus, the Tesla trillionaire. Shareholders approved the biggest pay deal in history, offering Elon Musk $1 trillion if he meets performance targets. All right, we're going to get you up to speed on how some of these global markets are faring. Some stabilization coming through overnight, as you can see on the boards right in front of you. The European markets looking to open up slightly positive, up 10 basis points. FTSE less so, but S&P and NASDAQ saw a big down day yesterday for both of those respective indices, down 1.1%, 1.9% yesterday by the close. Today, looking up, despite the fact, though, if you swap over the board, the handover from Asia has been quite negative. So MXAP, we are seeing a negative session, down 0.9%, on track for a weekly decline there, with the losses led by the Nikkei and the Kospi, the South Korean index. Over in 10-year yields, we're seeing a flight to quality go through. So we are down about 5-6 basis points over the course of the session yesterday. This after the challenger job cuts came through weaker than expected. So what we are beginning to see is more signs of a weakening of the labor market, despite the fact that the official data hasn't been published, obviously due to the shutdown, the longest shutdown in history. The pound also sipping a little bit this morning. We are at 131.20, so down about 0.1%. Remember, we had that slightly more dovish Bank of England meeting come through yesterday with a finer split than what people were expecting, 5-4 in favor of keeping rates on hold, suggestive of an imminent rate cut or perhaps a rate cut to come at subsequent meetings. And then gold, we are very close to $4,000 again. We might actually break through it now, 3,999, 0.5% firmer this morning. Okay, let's take a look at other earnings that are coming through this morning. Hensoldt, the defense company, has a 9-month revenue coming in at $1.54 billion. That is up 12% year on year. Its 9-month adjusted EBITDA is also up 13% year on year at around $211 million. In terms of its full year adjusted EBITDA margin, that's coming in at least 18%. Versus estimates of 18.1%. So essentially what we're seeing is the full year revenue of about $2.5 billion versus estimates of $2.55 billion, in line with estimates there. Let's get some more color from all of this from Bloomberg's Europe correspondent Oliver Kirk. I know you've been following the defense sector very closely. Ollie, what stood out to you from the numbers this morning from Hensoldt?
Yeah, absolutely. So Hensoldt, just a reminder to everybody, they make sort of radars, sensors, optics. They're the eyes and ears of the battlefield, and they're really used across, whether it's the maritime, ships, planes, and all kinds of territorial. When we talk about this sort of drone wall and all the sort of sensitive things that they're going to put on the eastern flank to get and detect Russian drones, this is this business. And this is a business that has caught a huge amount of interest over the last couple of years and is up 150% or so far this year. When you look at their numbers so far this year, their order intake for $2 billion, that's versus 1.8 of last year. The backlog, again, maintaining very nicely at more than 7 billion euros, and their EBIT margin for the first 9 months of the year coming in at 13.7%. There were a couple of adjustments to the outlook, Jumana, and we have them on the screen there. We'll just take you through those very quickly. The revenue coming in at 2.5 billion. That's on the lighter end of the guided range. The EBITDA margin at least 18%, which is actually higher than what they had originally guided, which was 18%. So they say that they may well exceed that 18%. And the bill-to-book ratio, this is absolutely key, Jumana. This is a gauge of the amount of demand that this business has versus what they can deliver. Initially is at 1.2. They're now at 1.6 to 1.9, which is just a very good indicator of the kind of demand that this business is having, saying that it's going to continue. And that has been echoed from some of the commentary from the C-suite. I'm just seeing here from the CFO saying that the record backlog gives us an exceptionally high degree of visibility and the necessity for stability to expand their capabilities in their targeted sort of ramp up of trying to get more of these deliveries out to customers.
Yeah, I mean, Ollie, this is a stock that has more than doubled over the course of this year. The stock is up more than 150%. We've been talking about this throughout the course of this year, and the fact that the defense sector has been a huge recipient of investor interest. It's so much positivity about the outlook there. What would you say are some of the risks ahead?
Yeah, I think that part of the risks ahead, and I think this is really interesting, and you see the different approaches from these different businesses. Today we have Hensoldt. They've taken a much more cautious approach in terms of their build-out, in terms of their capacities, and we've heard similar things from Saab, contrasted to what we heard from Rheinmetall yesterday. Rheinmetall, which really wants to become this one-stop shop of European defense, they are not waiting to get necessarily all of these orders, and concretely, of course, all of their orders are rising dramatically, but they are building ammunition factories. They've started 4 of them just this year across Eastern Europe. We heard heard from the CEO yesterday that they have 40,000 armored vehicles that they need to deliver to Europe right now. They are now expanding into building satellites. So these are the kind of different approaches that we've seen from this sector. For Rheinmetall, they are trying to ramp up capacity at a rate at which none of these other businesses are trying to do it. And there is, of course, Jumana, when we're talking about expanding capacities, I mean, their order backlog for Rheinmetall is about 60 billion right now. They're saying by the end of the second quarter of next year, that could more than double. There is massive execution risk of being able to bring all of this stuff to market. We've seen it with the backlogs that are swelling across this entire energy industry. Very sprawling businesses, labor, materials. And so for both of these businesses, Hensoldt and Rheinmetall, the key is going to be when we hear from them on Capital Markets Day. Hensoldt Capital Markets Day is in 4 days. From Rheinmetall, it will be on November the 18th. And the question for these businesses, and this is what investors really want to know, is not what this sort of next 12 months looks like, is what the next 5 years look like, what the next 10 years look like for these businesses. What does Rheinmetall look like 10 years from now?
So interesting. Bloomberg's chief Europe correspondent Oliver Crook. Well, some other headlines are coming through now. We have Nvidia's Jensen Huang, who's been speaking, saying they are not planning to ship anything to China. And earlier on, overnight, there was a report saying that the U.S. will be blocking anyway Nvidia's scaled back AI chip exports to China. And so now we're getting some comments actually from the CEO himself saying that they're not planning to ship anything to China anyway. This has been a big point of contention with those U.S.-China talks. And you will recall when Trump met with Xi, there was actually no discussion of Nvidia. So we're getting a bit more detail now. Nvidia saying that they are not planning to ship anything to China. So to talk through the latest on the markets, I'm joined now by Delphine Arnaud, the multi-asset portfolio manager at Edmond de Rothschild Asset Management. Delphine, good morning to you. So many different strands I could take this conversation in, but I'm actually going to start with the AI theme of the last couple of days because investors are turning a little bit more cautious. They seem to be nervous about the future earnings growth, the forward-looking projections on some of these stocks, even though the earnings season has been quite robust. Is there anything that you've seen in this earnings season that would make you more cautious about the outlook for AI stocks?
I would say that it's not about being nervous, it's being impatient because earnings have been tremendous. Growth is very rapid for this company, it always has been, and margins are fairly very good. The point is that we don't see yet the earnings growth on AI capex. And so it's quite more a question of being impatient. What are these capex for, and how will they drive the profitability afterward? What we've seen is that AI is very important for growth, U.S. growth currently. It amounts for 100 bips in investment contribution to growth. So the music can't stop on AI, and in our mind it's very a revolution. If we think about industrial revolution, it was about automation of feet and hands, and now with AI it's about the automation of brain, but it will take time. Remember that internet, it came up in 89, so and the bubble burst in 2000, so we've got time. We have to be patient, and yes, the valuation have been far too rapidly above what these companies are delivering.
Yeah. And of course, so much of U.S. leadership this year has been concentrated in a handful of those stocks. I wonder, looking ahead, whether you see an opportunity to perhaps invest more in European equities, given it seems like the excitement around AI is starting to peter out. Does this present an opportunity for European equities to outperform?
Yeah, the performance was really concentrated on AI stock, and it it's also had an impact on US growth thanks to wealth effect. I think European equities, no, they didn't need to be out of favor because of AI. It's just that US growth was disappointing on herself. I mean, the Eurozone GDP is at the same level as in December 2022. So no growth since then. So no, they didn't. Euro stocks didn't need the AI suprema to be out of favor. It's also that there was a lot of promises from Merz in Germany, but Merz arrived just in March, so it's brand new for the moment. But he arrived with a lot of promises, with plans. There was also in EU the REARM plan, and we know that we also have the next generation EU plan still standing and waiting. 44% of the plan is still to be disbursed. And it represents a lot. It represents 2.4% of Eurozone GDP. So, the last month was out of favor for European equities because there was strike between tariffs and competitive from China. But they still have a lot of fuel for next year.
Yeah, so let me just ask you specifically about the defense and security industries. You probably heard me speaking to my colleague Oliver Kirk about Hensoldt's earnings earlier today. There's been a massive run-up already. Can that be replicated in 2026?
Well, for the moment, this defense and security thematic pulled back for a bit. There was a profit being taken. We are at the starting point of this thematic in 2025, and sure, it will continue in 2026 because the Eurozone really shifts in its mindset. It has a huge warning call in 2025 with NATO. It's more than 3% of GDP being expensed to defense and security now. It's a lot, and it will continue. So with the pullback of these equities, it's a good entry point. And it's not only about defense and security. Draghi really gave us the rule book in Europe. So major sectors, industrial sectors, will be in favor thanks to the Draghi thematics.
Yeah. Delphine, so good to have you on this morning. Thank you so much. Delphine Arnaud, multi-asset portfolio manager at Edmond de Rothschild Asset Management. Well, coming up, we'll be diving deeper into AI regulations and how patents are increasing across Europe. We'll speak to the president of the European Patent Organization next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The European Patent Organization says a third of patent applications are now related to artificial intelligence. But there are still lots of unanswered questions around the regulation of the technology. António Campinos, the president of European Patent Organization, joins me right now. António, just to kick things off with our discussion, I'm curious to hear whether the number of patent filings has accelerated over the last year or so because of the rollout of some of these LLMs and AI applications.
Yeah, good morning, Jumana. Thank you very much for having me. Yes, indeed, you're absolutely right. If we look back to 2015 and today, filings in AI have been multiplied by 45. The good news there is that Europe is still on the lead, followed by the US, Japan, and China. But even more interestingly, Jumana, if I may say, is that AI is a big field. So if you want to understand better what's happening in AI, you need to apply a better lens. AI, you have, for instance, a biological computer arrangements for biological models. You have image and video recognition. You have machine learning, and you have patent recognition. Europe is leading 3 of these 4 fields. So with the exception of the computer arrangements for biological models, where we are not leading, we are leading still today.
Yeah, so interesting. I'm curious to hear, how long do these patents actually last for?
Patent lasts for 20 years since the filing or the priority date. The priority date can be 12 months earlier than the filing.
Wow, okay, so that's interesting, right? Because it's taking a long-term view. So then the question that I want to ask on back of that is, how do you know that the AI regulation in 20 years' time is not going to be substantially different from what it looks like today? And also, there isn't a global standard for AI regulation. So how do you navigate those, both on a time frame, but also in terms of geographical jurisdiction?
Well, today, I think that the governments and also all the Supreme Courts in all regions of the world agree that a patent filing can only be done by a natural person. There have been attempts, the first attempt to file a patent for AI by an AI machine, and all the big offices in the world, so the EPO, the USPTO, the Japan Patent Office, the Korean Patent Office, and the Chinese Patent Office, I said no. He has to be filed by a natural person, by a human. But of course, as the interactions between humans and machine will grow, this understanding will be put into questions. For instance, maybe in a few years from now, we will require from the applicants who file a patent that they disclose the information on the AI algorithm that they use in order to produce an invention.
Yeah. What role do you see for your institution in helping to drive some of Europe's broader competitiveness? There's a big focus, obviously, at the European level to promote innovation and competitiveness. What role do you see for EPO?
Well, the role of EPO for AI, as for any technical fields, is to deliver high-quality patents. So a patent that really nails down what is new, what has an inventive step and can be applied to industry. Of course, in Europe, we're slightly more restrictive than the Americans in defining the scope of an AI. For instance, in Europe, the AI must produce a technical effect. In the US, it only needs to be an improvement. So, for instance, let me think, machine translation. A machine translation from English to Chinese, for instance, could be protected as such in the US, will not be protectable in Europe. So this is my first, the first answer to your question.
Yeah, okay, really interesting. And then you're also incorporating AI, I guess, into your own operations. The Deep Tech Finder helps investors get more information. Just walk us through that and how it's also been revolutionary for the work that EPO does.
Yeah, I think it's important to not to move away from patents, but to discuss technologies. Actually, patents are there to protect new technologies. And who produces most of the new technologies in Europe are the small and medium enterprises. So what we thought is maybe with all the data we possess to transform this data into business intelligence. So we produce a cartography, an interactive cartography that maps today 12,000 European startups. So you can then search per region in Europe, and just let me, for the sake of clarity, our Europe at EPO is 39 member states, so it goes beyond the EU. We have member states such as Turkey, UK, Iceland, Norway, Liechtenstein, for instance. So we've mapped these startups all around Europe. You can visualize them, and you can search, like I was saying, by region, but also by technical fields, also by funding. So did these startups got funding, for instance, the public funding from the EU or from the UK government? Are they in a startup phase, in a seed phase? Are they in the scale-up phase? So it's a way also to make sure that more easily the demand meets the offer. The venture capitalists can know where to invest.
Yeah, fascinating. António Campinos, the president of European Patent Organization, thank you so much for joining Daybreak. Well, there is plenty more coming up. This is Bloomberg.
I remain concerned about high inflation and believe policy should be leaning against it. After last week's meeting, I see monetary policy as barely restrictive, if at all, and it's not obvious to me that monetary policy should do more at this time.
Well, that was the Fed's Beth Hammack, sounding rather hawkish, I would say, but square that up against the data that we had yesterday, the challenger data coming through. And remember, there's more emphasis on this data because of the lack of official data due to the shutdown. But we had the third highest level since 2020, indicating that job cuts have started to accelerate within the U.S. economy and on back of AI, which is replacing some jobs. So keep an eye out on this and its impact it's going to have on the labor market. Speaking of the shutdown, also want to point out that U.S. IPO activity has started to trend lower as well. So that's interesting, too. If you take a look at the IPO index, it's dropped over the last couple of weeks. No surprise there. Again, shutdown has limited the ability of some companies to file. So the basket of stock is down 10% from that peak. It's something to bear in mind as we think about deal-making M&A going into next year. But it's having an impact on the U.S. economy. And then also overnight, we've been talking about the shakeout in some of these Asia-Pacific indices, namely led by the Nikkei, by the South Korean index. And take a look at the Kospi vol. This is the volatility underlying the South Korean index. And you can see that's massively spiked up over here, indicating that there has been a massive liquidation of positions that is going through. The Kospi down 2.5% or thereabouts overnight in trading. So keep an eye on that. Today, though, U.S. futures are beginning to stabilize as we head into the European Open. And speaking of Europe, the Euronext CEO, Stefan Bujna, is going to be on the opening trade in just a few minutes. Remember, we are thick into earnings season now, so a lot of the earnings are coming through from these U.S. corporates, but also attention turning to some of those European names as well. So stay with us. The opening trade is coming up next. This is Bloomberg. Thank you for watching.